Hey, Big Bulls, we are back with another edition of Bullseye with this week's hottest stock market stories. And today we'll talk about three things: IndusInd Bank's 29% share crash, understanding why Gensol Engineering crashed 50% in 10 sessions, and Musk's pact with Ambani and Mittal. So this week's been all about the jaw-dropping 29% single-day crash in IndusInd Bank stock. It's been the biggest drop since March 2020 during COVID. So what went down? Well, the bank dropped a bombshell about some serious issues with its derivatives accounting, which immediately set off alarm bells for investors and analysts. It turns out the bank had actually underestimated the cost of hedging in earlier forex deals. And this mess could lead to a massive hit of nearly 2,000 crore rupees to its net worth. That's about 2.35% of its total net worth as of December 2024. Now, the problem surfaced between September and October 2024 when the RBI updated its rules on derivatives. Instead of relying on outside companies to handle its risk, IndusInd Bank used its own team to manage the risk linked to borrowing and depositing money in foreign currencies. As a result of this, some old forex deals weren't properly hedged, and the bank didn't account for the cost of protecting itself against the currency risk messing up its financial records. But the bank has also said that it's doing a thorough review, and it brought in an external agency to double-check its findings. It assured investors that its profits and overall financial strength can handle this one-time loss, which will likely show up in either Q4 FY25 or Q1 FY26. Its CEO also voiced confidence about a profitable Q4. But to add to this drama, there's growing uncertainty around the leadership. The RBI actually chopped down the CEO's tenure extension from 3 years to just 1, and that has also added to investor jitters. But there's another factor, which is that the whole mess at IndusInd has raised a bigger question. Are other banks dealing with similar problems too? Maybe yes, maybe no. But reports say that the RBI has begun reviewing the derivative books of both private and state-owned banks. So that's something to keep an eye out on. Now, Gensol Engineering really had a crazy run from 2022 to 2024. The stock had shot up 20 times and investors were loving those returns. But in the past month, the stock has crashed by over 50%. So what happened? Why did investors have a change of heart? A quick background of the company is that Gensol Engineering helps out with setting up solar projects and also in EV manufacturing and leasing. In case you didn't know, the promoters of Gensol are also promoters of the popular EV taxi service BlueSmart, which is spreading its wings across India. Anyway, the boom in these segments meant that the company's revenue jumped from 160 crore rupees in FY22 to 963 crore rupees in FY24. So investors were naturally excited about all this. But then things started to go downhill in February 2024. It all kicked off with rating downgrades after the company started having trouble paying back its loans. ICRA even accused them of faking documents about their debt repayments. In their latest report, they slapped a default rating on Gensol, and then Care Ratings did the same thing. ICRA mentioned that Gensol had been sending out these no default statements every month saying that they were on top of their debt repayments. But now, they found that some of these documents might actually have been fake. And that's a huge red flag when it comes to corporate governance and liquidity, and that is raising some eyebrows. Now, of course, the promoters have denied all allegations of fraud against the company. But of course, there's also the weirdness with the promoters buying and selling shares. The chairman, Anmol Singh Jaggi, first said he'd buy more shares to show that he's confident in the company. But on March 7th, the promoters sold 2.34% of the company. Sure, they still held an overall nearly 60% of the company after that share sale, but the move has raised some questions. Because a few days later, on March 10th, they said they invested 29 crores back into the company by converting warrants into shares at 871 rupees each. And to put that into perspective, Gensol is now trading at around 270 rupees a share. So all of this feels quite odd and contradictory amidst the chaos surrounding the company. The company's got big questions around its finances and leadership, and you can see that investors are clearly worried and punishing the stock. The rivalry between business giants Mukesh Ambani and Sunil Mittal isn't just any old corporate drama. It's the story of India's telecom industry. For years, their competition has shaped the entire sector. But then the two giants sided together to take on a new challenger, Elon Musk's Starlink, which was looking to enter India. And now, as Starlink gets closer to launching in India, Ambani's Jio and Mittal's Airtel have each signed separate deals with SpaceX. So it looks like the competitive duo has flipped the script, turning what was once opposition into an opportunity for growth. We have talked about Musk's interest in India's internet space before, and you can check out that episode here. We'll link it in the description as well. But that said, this is not a done deal yet. SpaceX is still waiting on the regulatory green light to offer Starlink services in India. Since 2022, the company has been stuck in a licensing limbo. But let's focus on the deal for a minute. Is this a win-win situation for everyone? Well, for Jio, it means integrating Starlink into its broadband network and offering its solutions through retail and online platforms. By teaming up with Starlink, Jio can leverage its massive data traffic as the world's largest mobile operator, while Starlink's satellite network can help bring reliable internet to India's most remote corners. Airtel, on the other hand, already has a strong presence in satellite communications through its OneWeb project. Now it's looking to boost its offerings with Starlink's technology, helping expand high-speed internet access to areas where traditional telecom networks have struggled. And as for Musk, this partnership offers a much-needed backdoor into the rapidly growing Indian market, right as he is also pushing hard to bring Tesla to India. So it seems like they found that the recipe to winning here might be teaming up instead of fighting it out, and that has turned rivals into partners instead of squabbling over a piece of the pie of the Indian telecom market. And that's it from this edition of Bullseye, folks, for this week. If you have enjoyed this episode, don't forget to hit that like button and also subscribe to the channel and hit that bell icon so you know when the next episode drops. We'll see you next Thursday.